In this video, we're talking about how I do crypto research, and we're talking about where you might find a next 10x token, and how to do due diligence once you found interesting projects to look at. Let's get started. If we look at this from a risk-reward perspective, the earlier you are to a project, the more risk there is, but also the more reward there is, and the more chance you've got of getting multiples on your investment if that token and that project takes off. At the very extreme of this, you can look at kind of angel investing at the pre-product stage. I think the best place to kind of invest in either a team or an idea alone is at hackathons. Most of the hackathons have an open list of projects that have been submitted, and all that code will also be open sourced on GitHub. So you can not only go and look at which projects interest you, but you can go and see the kind of code quality that the developers have been putting into it. Next we have the token launch stage. There's much more risk of kind of rug pulls and scams here, because most of those won't come out of hackathons, they'll actually go direct to a token listing straight away. In 2017, there was the ICO boom. This has now kind of moved to either an IEO on an initial exchange offering or an IDO, which is an initial DEX offering. Either way, the kind of mechanisms are very similar, where an initial distribution of tokens are provided to the public in exchange for raising funds for that project. Then next we have the early traction stage, and this is the stage that I favour the most. Looking for projects which are kind of starting to gain momentum, either from an investment and a kind of yield farming TVL perspective, or just being used generally. It's not just kind of the developers that are using it, it's starting to kind of gain some traction in the space. This isn't going to get you in super early to a project, and it's going to take away some of the kind of token upside, but for me it takes away a lot of the projects that are going to kind of not even get off the ground. Either they're never going to get finished to the product, or once the product launched they're never going to find product market fit. I find it removing that section of projects and only focusing on the ones that are gaining traction gives me the best asymmetrical risk of my investments. For established projects, you can actually use a screener to filter down the industry by certain filters. You can put in different metrics to narrow it down to a short list and then kind of create a list of projects that you want to look at further. Now let's get into crypto due diligence. Once you have a short list or a project that you want to look at further, the first place that I'd suggest starting is with a team. The big thing here is, are they anonymous or are they doxed or transparent about who they are? For an investor, there's definitely an advantage in having a transparent team, so you can go in and look at who you're investing in. But for a developer, there's actually an advantage in being anonymous. Bear in mind that having an anonymous team increases the chance of it being a rug pull or a scam, but by no means guarantees it. The next thing I like to look at is the code base, and the beautiful thing about the blockchain sector is it's all open source. So I'll jump into the GitHub repository, go into the insights and look at the contributors. You can see that certain projects just haven't been worked on for a long time, or you can see that maybe there's only one developer working on this and they're kind of core, and that's almost a single point of failure for the project. All of that needs to be taken into account when you're putting together a thesis for investment. Also, I like to look at what partnerships they've got going on. Obviously, partnerships with big VCs is very positive, as it means the project's well funded and has good support in terms of liquidity providers. Check the vesting schedules on any kind of pre-sale tokens that the VCs have snapped up, because they've probably got these at a discount. I also like to jump into the timeline for the project and look at their Twitter feed and their Medium posts to kind of see how the news flow has evolved throughout the project life. If there have been any kind of incidents in the past which have been negative, how have they been dealt with? Is the team transparent in what they're doing and how they're overcoming problems? The final thing that I probably put too much weight on is the branding for the project. I like to invest in the best in class for a certain niche within the blockchain sector. I think in the long term, the projects with the strong brands will come through, be more recognizable and gain more traction with traditional finance as the industry evolves. So once you've found a great project, that doesn't necessarily mean that you found a great investment. We need to next look at the tokenomics and how they play out and benefit the token holder. Some projects are quite proud of just having a governance token where it just gives you voting right on the projects and there's no kind of redeemable value from that token. For me, I like to see some kind of mechanism for generating long-term demand. Whether that means using protocol fees or exchange fees to buy back the native token on exchange to send to a burn address, reducing the supply, or some kind of incentive such as staking or liquidity opportunities where it's going to attract investors to hold these tokens. When trying to comparatively look at different blockchain projects on a price basis, it's important not to look at the token price but at the market cap of that project. This is simply the amount of circulating supply or the amount of circulating tokens in the market multiplied by the token price. This will give you a vaguely accurate and widely used valuation for the project. When looking at different sectors within the blockchain industry, I think it's important to look at long-term fundamentals. For me, I think the DeFi space has still got a long way to grow. I think that once traditional finance kind of comes in and finds out about that and starts using Ethereum and building smart contracts for their own purposes, then that can really take off. Also NFTs, social tokens, the metaverse and payment protocols and mobile apps, all of these places kind of have a room to really take off in the future. Market conditions play a big part as well. A lot of money's made in kind of the out-season cycles where the latest meme coins are doubling in value every single day. But I believe that more money and more sustainable money is made in the bear markets by investing in really great projects for the long term. Bear in mind, investing in Bitcoin is very risky, and speculating on micro caps is kind of nosebleed risky. Don't kind of go in with any more money than you're willing to lose. I hope this video has been useful. There's a more in-depth post on my blog, which is linked to in the description. Hit the like button for the YouTube algorithm and subscribe for updates. Thank you for watching.